Hey guys, so welcome to the next video. And in this one, we're going to be talking about primary versus secondary structure. Now, this is a topic that I've briefly talked about in my YouTube channel throughout this year, but I really wanted to explore it in just a bit more detail because it's going to be something that applies to pretty much all the analysis that we're going to be doing, from now on. Of course, throughout the course content so far, especially in the technical analysis part of the course, we do talk about market structure, but I really want to break it down into talking about, primary areas versus secondary areas. So we'll just get started with that. Now, in terms of primary structural points, this is a very, very key bit of information, especially when we start talking about confirmation trades. And that's going to be the next topic that we get onto. But what are primary structural points? Now, if you really had to define it, it'd be the last area that caused a move into the point of interest. So that last area can be seen as a higher low in market structure, for example, in this downtrend, and it appears on the high time frames too. So remember these characteristics because they're going to be quite key, especially when we get into our analysis. But what we're seeing right here in this little diagram that I've drawn, at the bottom, we do have this demand zone that we're potentially looking to buy from. But let's just say we do want to confirm our trades a bit more. The area that we're going to be looking at as our primary high is going to be annotated in this red over here. Now, sometimes when you zoom too far in, you may become too focused on the internal range that you might even mistake it for primary structure. So just looking at this on the high time frame on the left-hand side, you can see as we're on the downtrend, moving towards that demand zone that we talked about last time, we do see that primary high. It's considered as the lower high moving downwards. It was that last high before the down move. But when you start to zoom in on the lower time frames, you might consider some of that internal structure. So as you can see where the X's are, you might start to consider that as the primary high. And that's going to be a mistake that trips up a lot of traders. When you are confirming your trades, of course, you could confirm your trades from these secondary highs as well. But the probability of them succeeding is not as high. So what you really do want to wait for, and if you do have the patience to wait for it, is to wait for this primary structural break. Once we break above this high that eventually led us into that demand zone, that's what we're going to be looking at. So what do we consider as the primary structure here? It will be the top green circle because it was the last high before the continuation of structure downwards. So as you can see, again, high time frame demand zone for the buys. And this is a live example as well. You see it so many times again and again. I'm not exactly sure what time frame this was based on, but like I said, the markets are fractal. It happens on every single time frame. But in this case, the primary high would be this one up here, because as you can see, as we're moving downwards, it was the last lower high before the down move. The secondary bit of structure is indicated in red. Now, what some people would do is they would mistake that and say, okay, once we get a break above this red zone right here, that's going to be enough validation for us to take that confirmation upwards. Instead, what you want to do is actually wait on the break of that primary high. And of course, I'm not saying that you have to do this every single time because there are scenarios where it does work out, but you want to increase probability. This is exactly what you need to do. So we will only consider a proper reversal trade once primary highs have been broken, not secondary highs, as they can lead to incorrect analysis. So if this secondary high was broken, but it reacted off, let me just see if I can annotate this right here. Give me one sec, guys. Okay, so if we, for example, got this break above this secondary high as we were talking about, and then reacted off this supply zone right here, there's no reason for price still to not continue downwards. Because if you really think about it, let me just change the colors up a bit as well. This the high, low, the high, the low, the high, and then now potentially the low. This could have been the next high to eventually bring us downwards. So what we really do need is that break above this primary high right here. Once we do have that, let me just clear all of these drawings. Once we have all of that, now we can finally start to look for buys. And that's exactly what has happened here. We're going to be talking about some of the entry points later on in some of the other videos, but I really just wanted to emphasize the importance of primary structure versus that secondary structure, especially when it comes into conformations and everything like that. But yeah, guys, just a quick short lesson. Quite a simple idea. Sometimes can be quite hard to identify, but what it is all about practice and practice. You know, you really need to identify the strong market structural points. But yeah, guys, that's it for this lesson. I'll see you all in the next one.